Dude, so there was a guy from Market Rebellion.
Uh-huh.
He said something like the SPX, this S&P 500, did a Pat Mahomes today.
Oh, it won at the very last second when it was down and shouldn't have.
Yeah, well, it came back and tied at the very
Yeah, I
last
saw
second,
it.
and then it won very quickly right after that.
It was
Talk about a comparison.
Football this weekend was wild.
Oh yeah, well, so to me,
yeah.
I mean, to me, the Chiefs' offense was like the SPX, the SP 500, and the Bills' defense was like the VIX with the Head and Shoulders.
Yeah.
You know.
Oh gosh, yeah. The VIX was all over the place today.
Yeah.
Well, there's a point where I was like,
That was
'cause
crazy.
it closed at 29.9.
That's I'm telling you, that's the Bills' defense. Is that not the Bills' defense?
Yeah, well, definitely collapsed at the end.
Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy. Yep, that is it, everybody. Welcome back to another presentation, yet another presentation of Drunkenomics. And if it's your first time, welcome to a presentation of Drunkenomics. So glad you all can join us. This is the drinking podcast with an economics problem. And I'm here with a few drams in front of me. And joining alongside me is our very much more gracious host, James Goldwater.
How you doing, Aaron?
Which makes me your less gracious host, Aaron Wong, because the VIX, the volatility index, is at 29.90. 29.90.
I'm upset that it's below 30, to be fair.
It peaked at almost 39, but dude, I mean, how mad can you be? Dude, you're so much more gracious than I am this week.
I'm gracious. I'm fine.
So, yeah.
I guess the one thing I'm a little mad about is, I understand markets bouncing back from being down 3-4%, but to close up after today, and all I can think the entire time is that the closing up is just like, why? What news did they get that suggested that the market should close up?
Well, if you always want to see some pessimistic news or a pessimistic view of the news in a really sarcastic, smart-assy way, you can always go to @Drunkenomical, DRUNKUNOMICAL. That's us on Facebook, or I guess the metaverse. So that's Facebook, Instagram, and then Twitter. You can also find us on LinkedIn. We're having like longer form stuff on LinkedIn. It's more of like me just really showing off my journalism degree, even though I didn't really learn anything in journalism. I don't think I did, at least.
But you did in your MBA, so at least you learned something.
I learned something in my MBA. I still didn't learn very much.
I feel like we're converting our LinkedIn kind of to a blog, and that's a very weird thing to say.
I know, because I don't like using the word blog, and I don't like associating myself with the word blog. But you can find it there. LinkedIn is just Drunkenomics. Just Drunkenomics.
How about this? We're doing some op-ed pieces.
Yeah, but it's not really like op-ed. It's more just like, here's what's happening. Here's one way to look at it. Here's the other way to look at it. Make up your own mind.
Here's the Drunkenomical take on what's up.
That's kind of what I'm doing. So, one of the things I posted about recently is China just lowered their LPR, which is it's essentially like the interest rates here in the US. When the central bank here, when the Fed lowers interest rates here, China just did that over there, but they lowered it by 5 basis points, which is not very much. But if you think about how much money they loan out, when I say loan out, I mean like when you think about how much money they invest in emerging markets, because it's these state banks, it's these Chinese state banks that are loaning out, essentially, i.e. buying debt in emerging markets, a 5 basis point decrease in interest across $500 billion, that can be a pretty
it's the difference between, in some cases, something that I can afford and something that's just too expensive. It's I need this road, but I can't afford it at those rates. But then 5 basis point cut. Well,
yeah. So, when countries like Laos, which are not very, not wealthy at all, and they've been selling off assets just to pay China. I mean, they've been selling off assets like Michael Jackson, that's an Ari Gold quote. But they've been selling off assets like crazy
to try and stay current with their debt.
Yeah, exactly. And China's they're acting like loan sharks, man. They're they're going in there breaking knees. I mean, not literally, but they're going in there, they're breaking knees, saying like, "Hey, where's my money?" It's like a scene out of Goodfellas. So
it really is. It's to be fair, it's not just China does this. Like hedge funds did it to banks did it to Argentina. They weren't particularly subtle.
I thought you were talking about Bill Hoy. I've heard from that guy.
Nah, it's you see a lot of it. It's
Yeah.
no one's innocent in that, but yeah, the Chinese state banks.
Yeah, exactly.
A little more intimidating when they start trying to collect debt than a few hedge fund guys from Delaware.
And the thing about China lowering those rates, they cited things like, their economy obviously is not doing very well right now. They have a housing crisis. Their stock market is in shambles. So they cited those reasons for why they lowered their LPR.
Which they probably needed to do.
Yeah, the loan prime rate.
I would say there's internal and external benefits to lowering that rate.
Yeah, so when I wrote that piece, it was like they cited those reasons, but I feel like the FDI reason, the foreign direct investment reason, I feel like that's also, it's funny how that also benefits that aspect of what they're trying to do with the whole, what's that, Belt and Road Initiative or whatever they did?
Yeah.
Right? So it's funny how that also accommodates that.
Yeah, it's exactly like when we were talking about earnings season last year, and it's kind of like, to the extent that it's like, well, they didn't specifically speak to the foreign direct investment and this being beneficial to that. Yeah. But it's critical, remember, to listen to what's said and what isn't said. So what isn't said is either being ignored on purpose because you're trying to avoid people from noticing, or what's being said. I want you to look at what I want you to look at, not I don't want you to look at the things I don't want you to look at, essentially.
So my thing is, it's also like, you can believe what they say and say, oh yeah, it checks out, which it does. It does actually help their housing market and all that kind of stuff. And, who knows what happens, but it can boost their economy. But it's also kind of funny how it just also accommodates that Belt and Road Initiative that they have. But anyways, enough of international finance, because we have this coup that we need to talk about.
Yeah, so I know we talked about coups last week a little bit.
2 weeks ago. 2 weeks ago.
No, 2 weeks ago, really. And it was just like, oh, well, there have been some fun ones. And then, of course, there was one today. So today is the 24th of January. There was one this morning in Burkina Faso, where the president was detained by the military. And they...
Raj Kabore, was detained by the military. This is fascinating because, we saw, a couple weeks ago when we talked about coups, we talked about Guinea, we talked about Myanmar. Kazakhstan's not really a coup, but we talked about it. Mm-hmm. But we left out Mali.
We left out Mali, which is the third largest gold producer in Africa.
And there was a coup there, but I don't know the full extent of that one. It was like a coup response to a coup from...
There was a coup in 2020 that put some generals in place, and there was a coup in 2021 that removed the people that put themselves in power in 2020 coup. So it's one of those, they've had 3 coups in 10 years. So it's one of those things where you're just like, really?
Yeah.
We could just have like a legitimate
They've had
election?
like 6 coups in the last 30 years or something like that. So it's...
Yeah, it's not particularly stable. And like I said, Mali is the number 3 gold producer in Africa. And then Burkina Faso, you'll never guess, number 4 gold extraction in Africa. So if you're looking for a real reason for gold prices to be up right now, it's because number 3 and 4 in terms of African production aren't particularly stable.
Yeah, well, when people paying attention to the gold markets know that this is going on, they know there's some instability ahead. What do they do when there's instability ahead? Well, they look to the futures market.
They buy what they can before anyone else notices.
Exactly. And we all know futures markets can actually influence the price of whatever that. When people cite gold prices, a lot of it is quoting futures, isn't it?
Yeah, it's either, you can either have a spot rate for the commodity, but usually you're talking about futures contracts for extraction.
For oil, usually that's what it is. So I guess
oil is always futures. Gold is, as it's a commodity, it's the spot price.
Yeah. So okay, yeah.
Now, the real thing I'll tell you is if you're investing in gold, there's 2 things about this, and the first one is if you're investing in gold because you think the world's about to end and you don't actually take possession of the gold, you don't have any gold. Congratulations.
Yeah.
And if you're investing in gold and you are taking possession of it because you think the world's about to end, you also take out huge insurance policies on it in order to get them to deliver any quantity of gold to your home.
So more premiums, it's like buying a futures contract and continuously rolling it forward.
Yep. So that's just some fun facts about the way certain commodity purchases work.
And the thing is, we mentioned this a million times before on our presentations. There are more claims on gold than there's actually gold out there. So
that's another issue.
Yeah, and I don't think it's going to get any better with these.
It really isn't with last week being the way it was, and then today being as chaotic.
Yeah.
So I'm looking forward to this week is the Fed meeting. Getting those results on Wednesday. So by the time you're hearing this, it was either earlier today or yesterday that the Fed meeting will have occurred, and we'll have I fully expect a very hawkish Jay Powell to come out.
Really?
I do. They've got to get inflation under control, and they know that. Well, they've lost. So they've lost control of the inflation narrative. They're not telling the inflation story anymore. And so,
what do you mean they're not telling? What do you mean they're not telling the inflation story anymore? Is that
they're not defining the inflation story? So they held on to the idea that it was transitory for so long that when it became very clear to everyone that it wasn't transitory before they admitted it, they lost control, right? So they're no longer controlling the story. So the story's now controlling the Fed. So the Fed has to do something to get on top of it.
But I feel like the story has been controlling the Fed for a long time, and the Fed is just now realizing that okay, we have no control of the story, which I don't know what took them so long. Everybody back in July was like, inflation's not transitory. And they've been saying that all the way through November until Jerome Powell was like, okay, it's no longer, he retired the word, like he had to retire the word transitory, which I can't believe was a news headline.
Yeah, it's not a jersey or anything. I think you just got you finally got, just looking at it, he's got to come out, he's really got to come out storming. He's got to come out swinging because with inflation being what it's being, that's undesirable.
Yeah,
and
you don't say. Well, but not only is it undesirable, but like you look at all the hedges against inflation. The stock market is down, which was kind of weird because today, miraculously, at the end of the day, it pulled a Pat Mahomes and closed up.
I still don't understand how that works.
Yeah, I still don't know.
The only thing I get is like, it's like, okay, if something was selling at like $100, then it was down at $60. If you liked it at $100, you'll love it. You love it at 60.
That's
so you'll buy. And I understand. It's like so part of me understands.
Yeah. I think that's exactly what happened with the stock market today. But yeah, I mean, it blew right through.
As of the 24th, is that this is a dead cat bounce.
Yeah,
so there's still a lot more downward.
And we'll see how people react to. We'll see how people brace for Wednesday tomorrow. So futures are slightly down, but yeah, I just today opened up, blew right through the 200-day moving average, just went right below it, just intense and intensely.
Yeah, so, there were some points where I was looking at it where
circuit breakers, where are they at?
I thought the circuit breakers were going to start getting tripped, and where there was a point where I was kind of like in and out of consciousness. Not in and out of consciousness. That's not fair.
You were asleep and awake.
Yeah, I was definition of not a morning person. Awake yet. Yeah. I was looking at I worked Sunday night, so but I'm looking at the markets, and I'm sitting here seeing like the Dow down 4%, over
down
4%.
About 1,000 points.
Down 1,000 at one point, and I'm like, man, if this keeps going at this rate, trading may be suspended today. If people really pile on.
Yeah. So like what I was trying to say was like all the hedges against inflation, which for some reason in this day and age, it's NFTs, Bitcoin, and the stock market. All of those have lost value today.
Yeah.
But gold didn't.
Well, so there's less of it being extracted in an easy to acquire manner as of now.
Yeah, and there's instability around gold as an asset. So
pretty wild day, which kind of brings us to
what's going on with the coup.
Yeah, so the coup. I guess in Burkina Faso, what they've got with the lack of stability there has been caused by the fact that since 2016, they've been in a guerrilla war with
Al Qaeda and
ISIS and Al Qaeda.
ISIL,
and Al Qaeda. A lot of soldiers have been killed. A lot of civilians have been killed. 1.5 million people have been displaced.
Well, it's mainly civilians. Mainly civilians have been killed, but a lot of military personnel have been killed too.
Yeah, so it's a lot of just it's hit and run attacks. It's guerrilla warfare. It's
Al Qaeda coming in, taking over a village, executing people in public.
Yeah, so there's a point where the government's made it clear, where it looks like the government can't protect the people, and the military is upset because they're going, look, we feel like we're ill-equipped, we're being sent out, we're being picked off.
Yeah, but according to them, it's not just ill-equipped; it's like they're underfed, underclothed, stuff.
Oh yeah, it's you're sending us out to do this, and we don't have enough food, we don't have the clothing for it.
That's what they're saying. I don't really know for sure.
We don't have weapons. Yeah. It's death by 1,000 cuts. Yeah. And we're getting shot at.
Ouch. Yeah.
Right. So it's like everything's wrong with our supply chain situation, with our quartermaster situation, and we're getting shot at. So this is not the way to do this.
Yeah. So eventually led to protests. This Raj Kabori, President Kabori, has apparently been arrested and detained. He's always been the military has never been a huge fan of him. He's never been a huge fan of the military over there.
Yeah, I know he stripped some senior personnel of their positions in the Army and the Air Force.
Well, anytime he senses that the head of the Air Force or the head of the Army is kind of turning against him, he'll just be like, I'm replacing you. I don't need you. It's kind of like Turkey with the Federal Reserve Chair. It's like, just get out. If you're not going to do what I say, get out, leave. Yeah. So obviously, lower echelons of the military personnel were just like, okay, you know what? This guy isn't taking care of us. We're not going to take care of him. He's no longer our commander in chief.
Yeah.
Let's all rebel against him. So that's what they did.
So it started as a mutiny and it ended as a coup.
Yes.
So
we'll see. I mean, I don't know what. Obviously, this is still new news. So maybe by Wednesday, when this episode gets dropped, there's more older news that will be out, and maybe what I'm saying, the news that I'm saying, will be olds.
Yeah, hopefully, we'll have some better answers about what the plan is, because if it's just to put a junta in place and then that's not really a solution, because you've still got a ISIS Al-Qaeda problem and you've still got 1.5 million internally displaced persons.
Yes.
So it's and none of that is good. Let's put it this way: if 1.5 million people were displaced within the United States right now, that would be devastating.
That'd suck.
And it's just you have a lot of economic damage, a lot of economic drain there.
Yeah. So we'll see what comes out of this. Obviously there's a lot of gold there. What else is there? Concrete.
Yeah, zinc, concrete, unfortunately, a concerning amount of child slave labor.
Very unfortunately, yeah.
It's one of those things that's just you look at it and I don't know how to touch it. It's like that's not good.
Yeah, it's more of just really us just telling you this is what's happening. This possibly, because we don't know the outcome of this. This could be one of the things affecting gold prices.
Absolutely.
So Mali is right there, literally right next to Burkina Faso. Mali produces a lot. They have a lot of copper. They have a lot of salt. I'm assuming Burkina Faso does as well.
Yeah. So the two West African nations, number 3 and 4 in Africa for gold production specifically, and then now that's disrupted. So I could see where this could cause a legitimate supply issue for gold for industrial purposes, or just gold for jewelry, for anything, for the gold supply in general.
That's what's going on. This instability, never good for the markets. And some would call, I don't know if you want to call what's going on with gold a bubble, because it's kind of gold is also a good hedge against inflation. Like, if you really think about it, it is. People say it's the ultimate hedge. I don't think it's the ultimate hedge.
Neither do I.
Some people say it is the ultimate hedge, which I don't. I'll let you stand on that hill if you want.
You guys can make your own decision about whether it's an ultimate hedge or not. Aaron and I will both, I believe, concede that it is a hedge. That is about the extent of where we'll go. I don't know. For me, the big bubble right now, other than just equity prices, right? Well, so other than just the stock prices, I think those are all bubble. If we're going to talk about bubble, I think real estate's another one.
Well, exactly. I think real estate's a bubble too, but I think it's one of those bubbles that's driven by. What's that called? Oh, low interest rates. Duh. Yeah.
Absolutely.
So
right, because we talked about that. Low interest rates means that I can borrow more money for the same amount. So I can offer more, buy a bigger house. Well, as interest rates go up, suddenly the number of people that are competing to buy houses at that price level shrinks, because there's fewer people who can afford to borrow that amount of money or are willing to borrow that amount of money at the new price.
Yeah, well, because they know that most of that's going to go towards interest. Exactly. More of that's going to go towards interest, really, in principle.
And so suddenly housing prices go down, and things are better now than they were in 2008. There are certain laws and mechanisms in place to prevent a sell-off of assets that causes the assets in question to lose value.
And I still feel like
creating that spiral.
Yeah, and I still feel like loaning practices, the securitization of these bonds, those have just gotten better. I think some banks have learned a lesson. Not all of them, I would say, because I think if they're not doing risky investments and going levered to the tits on
MBS
on mortgage-backed securities, I don't know why I couldn't think of that. On MBSs, then they're going leverage to the tits on something else.
Yeah, there's always a speculative.
That's what I'm saying. It's like it's 6 1 half dozen the other.
Somewhere.
So,
it's just wait, what are you investing in?
Yeah, but this but stock market isn't a bubble. I felt like it was. Maybe this is it popping,
or might be.
Maybe this is. I don't know.
Maybe it is the beginning. Maybe it's the beginning of maybe it's a deflation. So we've talked about bubbles in the past, and we've talked about historical bubbles and sort of the big thing you worry about is the bubble popping. Mm-hmm. But what we've never done, and we realized this just the other day, is that we've never talked about actually what
defining a bubble.
Yeah, we've never defined what that is. We've used it, and it's so we figured we'll go ahead and just kind of define what a bubble is right now. Yeah. That'll be our topic. What is a bubble, and how do certain markets or different sectors fit that?
Yeah, and we don't mean champagne. We mean like actual bubbles, like economic bubbles, price bubbles.
Yeah, security bubble, asset bubble, anything.
Not anything can bubble. Sorry,
because there's because really anything can bubble. You can have credit bubbles, asset bubbles, stock market, commodities.
Yep.
A big one would be last year. We had a commodity bubble on
lumber.
Lumber.
And copper. Remember the copper bubble too?
Copper was up. Now the bubble popped on both of those. They're back down at more reasonable levels. But
Yeah.
like I said, if we're gonna talk about, we need to define what a bubble is.
It's
So
really, I mean, it's really just in 5 stages. A bubble, just by its definition, is just the
so the best description I've read is that it's essentially a willing suspension of disbelief in a market.
I was going to say just like a situation where asset prices are just way higher than the actual fundamental value and the utility of that thing.
Oh yeah, it's when you start to see rampant and wild speculation for no reason other than people think it's never going to end, right? So we saw that.
I think historically the biggest one is Tulip Mania.
Tulip Mania was a big one.
Isn't that the most famous one? It's like one of the most famous ones in history, isn't it?
Well, it's talked about in Wall Street, or is it Wall Street too? But yeah, Tulip Mania is a big one. So Tulip Mania, for those of you that don't know,
1600s Netherlands.
1600s in the Netherlands, and people were mad for tulips. And so you'd have people spending a year's salary to buy a single tulip.
Yeah, I mean, you could buy a house with what you would use to pay for one tulip.
What you were spending on the tulip bulb, you could have purchased a house for. And you had people buying tulips 2, 3, 4 years in the future.
Yeah, they're buying futures contracts like crazy.
Yeah, and just speculating on tulips. And it went mad what people were willing to spend on,
so the first,
on it. And then we get to a point and suddenly people realize, oh, this is stupid or not sustainable. And the bottom falls out, the bubble pops, and suddenly you're sitting here. I've spent 2 years' salary to own the right to tulips 5 years from now. Oh my God, they're worthless.
Yeah, and now you're the bag holder. But basically, like, I mean, it really happened in 5 stages if you look at Tulip Mania. And this really is true for the real estate bubble. This is true for...
It's kind of true of every bubble. Now,
the internet bubble,
Here's the wild thing about bubbles. You can never tell early or during. You can only identify these things after a bubble.
Usually around stage 4, stage 5. So let's go into the stages. Let's start by the first one, right? Which is, this is according to like some economics things. I saw this on CNBC.
Yeah, this is just kind of the 5 very basic things. And the very first thing is always some sort of displacement. It's actually what they call it, is displacement. And it's just what it usually means is that something new or a shift in views has made something new valuable. Yeah, it doesn't have to be like brand new. So it's not like
the housing. Yeah, like the housing bubble wasn't like, it's like houses were a new thing. It's just the way the housing debt was originated.
It's the focus went on to housing in a way that it hadn't been before.
Yeah, exactly. But it was also, but what was different was, okay, what securities were being used to leverage the fact that all these houses could be built and all these people could be put into these homes, right? That's kind of really what was the displacement there.
Yeah, well, you suddenly had so you saw banks that saw originating mortgages not as the lucrative part of doing mortgage contracts. They actually saw that as necessary to get a house sold so they could create a different security that they could make a huge amount of money on.
Yes, exactly.
Trading. So it was very much that what used to be the end result profit point became the input in a totally different profit scheme. I don't want to say totally different profit equation.
Yeah, and that's exactly it. I mean, basically, it was really a mortgage bubble, and this mortgage bubble was kind of flowing into the housing bubble. Basically, there's that displacement. It's when investors really just get excited about a new thing, a new product, a new security. Crypto, kind of. Like,
you could argue that cryptocurrency.
I would even argue. I would just say it was a bubble. Like
definitely the internet. The internet was in the mid-late 90s until 99 with the .com burst. Because I remember being a kid and looking at, like, in 1998 and 1999, right before the .com burst, watching the Super Bowl game and the ads just being for stupid web startups, like stupid companies, and I'm just thinking to myself at one point, how much does a Super Bowl ad cost? A 30-second bit. Oh, so this weird website that I don't know what it does hasn't made any money yet, is willing to pay that for 30 seconds so you know who they are.
$2 million for 30 seconds, yeah.
And then the real funny thing was I think in 2000, so it was the year after the .com bubble, someone actually put a Super Bowl ad out there about the .com bubble bursting, and I was like, that's really bad.
I think was that the E-Trade one? That was probably the E-Trade one.
It might have been.
E-Trade has
like right on. It was like the year after. It was like all the ads from the year before, and then it just an empty street of like shuttered buildings.
Yeah.
It's like, that's funny.
So,
But,
obviously when there's a displacement, when there's a lot of excitement, this leads right into stage number 2 of the economic bubble.
which is exploding prices.
Yes.
Right? So that's just prices going through the ceiling.
You can call it exploding prices. The official real way you call it is price boom, but I like exploding prices better. I'll give you that much.
You got exploding prices. So they just surge.
Yeah.
It's suddenly you see this price demand, and it's either based on surging demand, supply just unable to keep up with that.
Well, like if you look at Tulip
is.
Mania back in the 1600s in the Netherlands, it was like one farm or like one area that was producing all the tulips. And they were like, dude, we can't produce enough tulips that fast because don't tulips take forever to grow or something like that?
Yeah, so during Tulip Mania, we could see the average price of a single flower exceeded the annual income of a skilled worker and cost more than some houses.
Yeah, but that's because there was only like one, like everybody wanted to buy one because of what it signified or whatever it was. I mean, like what's so special about a tulip, really?
Nothing.
Yeah.
Nothing. What's so special about an NFT?
That's what I was going to say. What's so special about an Ether coin?
It's the same market.
Yeah. And obviously tulips are cool. I'm not trying to just trash on tulips here, but I would never pay $50,000 for a single tulip, right?
I would never pay $50,000 for a tulip that I knew is going to die. So at least the person buying the NFT knows that for as long as the electricity's on and they remember the password, they can enjoy their NFT.
Yes, yeah, you can still it can still bring you whatever enjoyment it brings you. But tulips, that started like because it was such a new phenomenon. It's not like the tulip farmers are like, oh my god, let's like. We knew this is coming. We have all these farms. Thank God for all these farms. And tulips generally take a long time to actually like grow and, I don't know, do that thing. So that's why futures contracts became a thing for tulips. And that really exaggerated the next phase of this bubble, which the next phase is euphoria.
So yeah, in the euphoric stage, it's now the derivative markets are taking over. Right. So in the derivative markets, you suddenly have.
It might be. I don't know if it's taken over, but yes, I mean it's definitely a driving force.
It's that you suddenly see everyone is. It's euphoria. People are afraid of missing out.
It's FOMO.
So they start jumping. It's that FOMO. They start jumping in. Suddenly, it's you see that everyone else around you is making so much money, or is. This guy I know spent $5 on tulips and now it's worth $500. And so eventually people so prior to now, you don't necessarily have the suspension of disbelief in the euphoric stage. And euphoria is when the suspension of disbelief comes to I think its peak.
Yeah.
It's where suddenly everyone just goes, wow. There's no downside in sight.
At the end of this euphoria stage, that's when people are starting to be like, okay.
That's when the disbelief starts to creep back in a little bit. So in the euphoria stage, you've just got this. Everyone's jumping into the market because the prices are just going up and up and up. They're going to make their money back. Don't worry about it. Buy it on credit. Buy it on margin. Buy it on margin. You'll be fine. Just buy it on margin. You'll be fine. As long as prices go up, you'll be gold. You can refinance your house it'll be okay. Don't worry about it. And so that's
leverage your house. What an idea.
This is where I would argue this actually starts to become a bubble. Like this is where the bubble truly is defined, because displacement and price boom, that's just the beginning of any new thing entering a market. And so long as that growth is
just look like GoPro. I mean, GoPros. There was kind of a bubble in GoPro when they first hit the markets because it was like
they very first came out. I remember that.
Yeah, like a do everything cam. You can take it underwater with you. You can go scuba diving with it. Mm-hmm. What a cool little device, right? So there was a price boom, but like no one ever said that there was a GoPro bubble. You know what I mean? Because there was no euphoria. It was just like everyone got it. Nobody was trying to sell it fast. You know, it's not like
people actually wanted it. It wasn't that I'm buying it as an investment. I'm buying it to consume it.
Yeah, exactly. So that fourth stage never happened with GoPro, which is the profit taking phase, right? But then again, GoPro really isn't an investment. It can be, but I don't know how much liquidity there is in the GoPro market.
Probably not a whole lot. So then we get to so the profit taking, which is part 4 of this, which is this is suddenly at some point this is where the suspension of disbelief, that willing suspension of disbelief, starts to go away for certain people. Mm-hmm. So you have people at this point who start looking and going,
$50,000 for a tulip. Wow, that's a lot of money.
I own 100 tulips. Maybe I shouldn't own any tulips anymore.
Well, but it's not even that.
Maybe it's time to sell.
But it even becomes speculating. It's like I own 100 tulips, I got all 100 of them for 25,000. Now they're all 50,000. I can sell half of them and at least secure my break even, right?
And
yeah.
But so this is at profit. The profit taking is when you start to see kind of the first investors.
You're like,
we'll
this is
often
crazy.
call it our conversations. We'll call it the smart money. We'll start looking at things and going,
"This is ridiculous." Yeah,
this is not sustainable. In fact, this is unsustainable. I need to realize my profit. I can't just be recognizing my gains. I need to realize my gains.
I need to convert this to cash.
So they start to sell. They realize, hey, I've made money. I'm safe. Maybe it's that story of the Wall Street investor sitting at getting his shoe shine, and the shoe shine boy starts giving him stock tips, and he goes, "Oh man, I need to get out.
Yes,
I need to get out."
exactly.
Now we all know that's just an apocryphal story, but maybe that's what it is.
Yeah.
But
I'm sure it probably happened at one point in 1929 when some Wall Streeter was like, "What? What do you know about J.P. Morgan stock? Oh my God, what is happening?"
Talking about a company, it's just like, wait a minute.
How can you afford the stock? Yeah, it's like,
it's very much at some point someone just it's essentially you have these investors who have been part of this, whether they've been part of the euphoria and everything else, or whether they've been skeptical but they're looking to make money. At this point, they just go, you know what, Dingo, I will be stepping out of the euphoria stage.
This is like when real estate investors in 2008 were like, I have 5 homes. I don't need all 5 of them.
This is the point where Mark Baum is walking through an airport going, "There's a bubble."
Yes,
there's
exactly.
a bubble.
Which, I think this is just really accelerated. I mean, because this phase, I don't think takes very long before it splits into the next phase.
No, profit taking, the stages 4 and 5 kind of overlap because there's definitely...
But profit taking is the first domino.
Is the
falls,
first step. And then you
3 dominoes later, it's stage 5, it's panic.
Yeah, so that's where we get to the final stage kind of a bubble, which is the panic, which is to say people now realize that they're left holding a bag that they can't afford, or they're in a bad position, that there is no greater fool to buy from them.
Yep.
And so they sell as fast as they can. They dump out of the market, right? Hopefully, and they're all sitting here hoping that they break even. Most of the time they don't. By the time
it's a panic stage,
you're in a panic,
it's too late. It's way too late.
So this is kind of how steps 4 and 5, so profit taking and panic, look when they're together, because they are together. Essentially, it's their 2 sides of the same coin. One side happens, and then the other side you're going to see towards the end, right? So it's the two ends of a hot dog as you're eating. And I'm just thinking of that one line in Margin Call, because we're going to come back to Margin Call every episode. Not every episode, but almost every.
I mean, would it be such a bad thing if every episode we did quote Margin Call?
We have to make a reference because there's always a point where it's like, man,
is that really a bad thing? I mean, I think
done.
that's such a brilliant movie. I mean, it's like our most thematic movie. I mean, as much as I love Wall Street and Wolf of Wall Street,
that one, and then the Too Big to Fail that HBO did.
That
was fantastic.
I would say the five main movies of Drunkenomics is what? Wolf of Wall Street. Margin Call is probably 1 or 2.
Margin Call's got to be number 1.
Okay, probably. It's probably. For the longest time, I wanted Wall Street to be number 1, but Margin Call just makes so much more sense.
They go back and forth. It depends on what we're talking about.
Yeah, it really does. So either Margin Call or Wall Street, Wolf of Wall Street, Big Short, Too Big to Fail, and a very close 6th is Office Space.
Absolutely, absolutely.
And Trading Places. Gosh, there's so many good ones.
There are if you're willing to take the time to enjoy and learn.
Yeah.
But anyways, it's a point where they're talking, and they're talking in the office, and Jeremy Irons just goes, "It's not panic if you're the first out the door."
Oh yeah, that's right.
Right, it's that point. So like profit taking is that it's that profit taking is when it's like, okay, the party's over. I need to sell.
Yeah.
It's panic. So if you're one of the first, let's just call it, if you're the first third, you're profit taking. If you're the last third, you're probably panicking.
Yeah, because what's that line in Margin Call? It's like because by lunchtime word's out.
By lunchtime word's out.
If you don't have 60% of it off of your books, you're gonna get 60 cents on the dollar if you're lucky.
Yeah, it's that point where he's talking about a fire sale.
Yeah, and he's like by 2 o'clock you're lucky to get 30%.
By lunch, he's like all your trades have to be gone.
Yeah,
because
if they're not, what's on your assets
by lunch word's out. By 2 o'clock, you'll be selling at 60 cents on the dollar if you're lucky, and you'll have the feds in here trying to stop.
Yeah, exactly. And
that's when they go to the attorney who just goes,
"It's yours to sell. They can slow you down.
They can't stop you. It's yours to sell."
Yeah. So, gosh, what a great movie! It's because it's not just. I mean, the plot is pretty good, but it's such a profound movie.
Well, because it really does. It really does walk us through, and truly, it walks us through all 5 stages of the bubble. I mean, it skips.
No, it skips one.
Parts 1 and 2.
But 1 and 2. Normally, it gets skipped. Most of us don't see 1 and 2 in a bubble. You know, like the housing bubble is just like people were looking at housing market going like, yeah, well, houses, real estate appreciates over time. Anyways, they were just like, whatever, this is normal. And then eventually, once it started to accelerate, that's when people were like, I gotta buy houses right now.
So that's
and then rent them
euphoria.
out. Yeah.
So it's in the euphoria stage is when you start to notice the symptoms of a bubble.
That's when word's out. Everybody sees it. Everybody wants to buy Bitcoin.
Even stage
Everyone wants to buy an NFT.
The profit taking, that's not. And that's not indicative of a bubble either. That's just the first 4 are essentially standard business.
Yeah.
The issue is the panic is when suddenly people realize that they've bid it up too high, they can't afford it, it's not sustainable.
Yeah.
There's the great mini series that they made with Rich Dreyfuss, Madoff.
Oh,
have you seen that one?
I actually haven't. Richard Dreyfuss is Richard Dreyfuss Bernie Madoff?
Yeah.
Oh man,
I really liked it.
I mean, I love Richard Dreyfuss and Jaws. So, but whatever. Yeah. So
absolutely,
of course, yeah, he's great.
But there's a point in that where at the very beginning, he's kind of talking, and he's like, growth is good. You always want growth, unless it's uncontrolled. We have a word for uncontrolled growth: cancer.
Oh,
and so that's where we get to this idea of what bubbles are. Bubbles are that unsustainable, uncontrolled growth. It's
what else had uncontrolled growth was that mound that he was building in Close Encounters. Have you ever seen Close Encounters of the Third Kind?
Oh
he
was
building that mound that had uncontrolled growth too.
Yeah.
But anyways, you were saying.
So the whole premise of like kind of like a bubble, like the way I talk about the way I would morbidly describe a bubble is it's kind of like jumping out of a plane or off a building without a parachute. It's not the fall that kills you, it's the sudden stop at the end.
Oh, well, that's also a line. Oh, wait, no, that's not a line in margin call. The margin call is
not today.
It's not the height that scares them or something like that. It's the fear of them actually going to jump. Or
when people stand here, it's not the fear of falling, it's the fear they might jump.
Yeah, which is also a really profound line too.
Yeah,
which is why it's such a great movie.
It is. But just to me, it's like displacement, price booms, euphoria, and profit taking. None of those are inherently dangerous. Euphoria isn't good. Euphoria is bad. It's not a good thing.
But it's really just a psychological. I mean, they're all psychological reactions, one way or another, right? I mean, it's like the 5 stages of loss, really, if you think about it, or the 5 stages of grief.
The problem is at the end of grief, you have acceptance, which is the good one.
Yeah,
essentially the good thing. And then at the end of a bubble, you have panic, which is demonstrably the dangerous part.
Yeah,
so really it is stage 5. It is the panic that makes the bubble.
Yeah, exactly.
Bubble.
But the thing is, not necessarily all bubbles burst. I mean, a lot of bubbles they go up and they stabilize, right?
Yeah.
People were arguing that's what was going to happen with Bitcoin.
So,
but
so the way I would say that when you end up with a bubble that inflates and does not burst, but we end up settling at a new point that we would call the new norm.
It's inflation. Would you call that inflation?
Yeah, that's inflation. I would say that's what happens there is that the euphoria stage is a lot more restricted. Mm-hmm. It's more rational. There's more rationality to the euphoric stage.
Yeah.
So it's no longer just it's not blind. There is some aspect of control to that.
And I also feel like it's usually some sort of elasticity, or I guess in this case, inelasticity involved with that thing, right? Because you don't need a Bitcoin to live your day-to-day life. You don't need it.
No.
But you need stuff like natural gas to live most people do, like to live your everyday life. So if the price of nat gas goes up,
you need oil.
Yeah,
petroleum goes into so many products, from industrial lubricants to plastic.
Yeah, exactly.
And so it's just one of those things you look at and you're like, okay, that's something that even if we see a panic in oil, it'll come back eventually.
Yeah, it'll stabilize, but it might stabilize. So it might go up and it might come back down a tiny bit and stabilize at that point. But usually with the oil markets too, it's like, all right, there's a supply chain concern. This country is going through a military coup, let's just say, for instance, and all of a sudden they can't produce any more oil. Now everybody's buying oil futures because it's like, I don't know because this country, if they produce 10 million barrels a day, how is that going to impact the price of oil moving forward? So that'll kind of lead into not really the displacement because it's oil. It's going to skip that displacement thing. It'll go into the price boom. And then eventually some investors that are late to the party, that wanted to speculate, that wish they bought that futures contract, they'll pump the price up a little bit. and then the profit taking will happen, but the panic won't happen because everybody still needs oil.
Yeah, that's exactly right. Is that there's some other controlling factor that prevents a panic, or so with let's think about banking. In banking, there used to be banking bubbles. You would see that displacement into loans. You would see price booms in terms of what you could do, what you could borrow, what banks were willing to invest in. You had this euphoria of people willing to borrow or essentially credit, and people doing the profit taking loan, and then you'd have a panic about in this case I'm talking about the starting of multiple banks, which historically occurred. There would be banks everywhere, and you'd have panic, and then the banks would fail. Well, the thing is, banks there are no bank panics in the U.S. anymore because the FDIC.
Yeah.
There's no reason to panic, right?
Yeah.
So it's one of those things where it's like, look, if I've removed the reason to panic, we can avoid panicking.
Yeah, and that's why the FDIC is there, really. But the weird thing is the government is starting to implement all these different instruments or these different laws to really kind of keep the panic phase from happening. Because panic, all these things, it seems like every stage is some sort of over-exaggeration of just human psychology and human belief and human behavior.
Yeah, it's always when you get to panic. Remember, because what'll happen, and this is kind of the easy way for me to describe, because the bubble can be big, a bubble can be small. The panic and the euphoria have the strongest relation. If the euphoria is huge and out of control, then once you get on the wrong side of it, the panic is huge and out of control.
Yeah.
So if you put your phone down and you can't find it and you search in your pockets, you have that surge of fear. Oh my God, what if I lost it? What if someone stole it?
What if I left it in my Uber?
Oh yeah.
Yeah.
So your euphoria when you got the phone, your panic when you realize that you may have lost your phone. There's a relationship between how much it means when you were getting it to how much you fear as you're losing it.
Yeah, and then it's I last remembered that I had it in my own apartment, right? So you're not going to over panic when
it's inconvenient, but it's
probably,
here.
Right?
Whereas the euphoria of, I bought 5 houses. Well, now the panic is I can't afford them because the rates on all 5 of them went up and I can't refinance. Oh my God. Right. So it's suddenly this, right. So there's a size, there's a relationship between how crazy the euphoria was to how
Bitcoin,
strong the panic is.
Yeah, like Bitcoin, $3 trillion market cap. Now it's cut in half, $1.5 trillion, or not Bitcoin, but crypto in general. $3 trillion market cap. Now it's 1.5. You want to tell me that euphoria and that panic stage isn't correlated in that scenario? I'm not saying Bitcoin's a bubble, but
I will.
I feel like at one point, okay, fine.
I believe Bitcoin to be a bubble.
I think it is too, to be honest with you. But I just don't want to offend all our Bitcoin believers out there because just based off of the conversations we're having in Discord, it seems like everybody likes Bitcoin, which I don't want to. I'm not going to tell you you're wrong because it can't happen.
This is going to sound really dismissive and offensive, and I don't mean it to be. But bubbles can be fun. It's
fun to speculate. It's absolutely like GameStop and AMC. Man, we talk about a bubble. That was a bubble. That's a bubble, and it's bursting now. It's already bursting,
and everyone knew they were bubbles.
Yeah, everybody loved it. Everybody loved it. Everybody wanted a piece of the action. I mean, the euphoria was massive. Kind of reminds me of that Chris Cornell album, but
Yep,
I mean, the euphoria was there. Everybody wanted a piece of the action. Options volume off the charts, stock volumes off. The chart, the companies were changing hands 5 times in a day.
Yeah,
because the daily volume was 5 times that standing.
And the great thing is after that, people who knew what was happening, they were involved in the profit taking. Other people were involved in panic on the way down, and we're basically back where we started.
Exactly. And I think right now with the stock market, I thought, to be honest with you, we've been in correction territory for a while.
Oh, yeah.
I think whenever the stock market goes into correction territory, it's a form of panic, I think.
Yeah, well, so for me, panic is there's no rational. When you're panicking, you lose your reason. I think correction I
think people are losing their reason right now.
Oh, I agree, but I think they didn't. But I think it's because they got into this in the euphoric stage and they never understood that why they didn't have a good reason to buy where they bought, and so now that things are on the way down, all they see is it's losing value. I have to panic sell.
Yeah,
which is bad. It's not good. That's why you see other people who are willing to buy it.
Yeah,
on the way down.
Have we defined correction before? We probably have a while ago. But anyways, a correction is basically when there's a 10% decline of the market. So if the SPX was down 10% from its highs, it's from its highs, right? From its all-time highs, or from its most recent
From
highs?
they just say from its most recent high.
Okay, yeah. So if it's only declined from the last time, and that decline value reached 10%, then technically that's a correction, right? Am I wrong there?
It's 10% off whatever the most recent peak is.
Yeah, but it's got to be pretty rapid. Like if it's a slow 10% decline, that's not a correction.
There's not right. There isn't a time.
Really? Because I know it can
So if something started at $100 and it goes to $90 in a day, that's definitely a correct. It's entering correction territory.
Yeah.
If it takes 5 years to get to $90, you can still say, look, it's been trending down. It's fine. It's in correction territory now.
Oh, okay.
Now, you would normally say that there's no reason for something to do that over such a long period. Like, you wouldn't worry about it. You'd just be like, it's doing this. I'm probably going to sell out, or, buy more maybe. But so there's generally a shorter term view. So it's entering correction.
Yeah, but the thing with the stock market is there's so many, I feel like in the stock market, when it comes to these 5 stages of the bubble, the stock market can literally go from one of these stages, disappear, and then reappear anywhere in the 5 stages. And I think that's what happened there was this panic, 10% sell-off, right? We entered correction territory this morning, and then it disappeared, and then it reappeared at euphoria. I don't want to miss out on this correction. I want to buy the dip,
Yeah.
So it's I think that's what happened today. Was it just it disappeared and it reappeared at euphoria?
Yeah, I think we saw prices get down to a point where you might have said someone who's sitting here looking at Microsoft being like, oh, I don't know if I'm willing to pay 30 times PE. But then it gets down to maybe 25 times PE.
That's pretty attractive, right?
Well,
at
25,
not bad,
I can make that justification. I can justify.
Yeah,
mine.
well, and I know a lot of people that are just like, you know what, Nvidia's I almost bought it at 300. I saw a lot of call buying when it started at 300. And that's at 200. It's So a lot of people are looking at I liked it at 300. Now it's at 200. Ugh, or 230 really, but maybe.
Yeah, to me, it's definitely one of those interesting things. Whereas when you see people entering that profit taking or panic phase or a sell phase where you see a stock enter correction, so it starts to lose value, is to me you end up at a point where it's like, okay, if I like the stock at 80, I'm going to love it at 50.
Yeah.
And unless something's changed your mind about the security in question.
Yeah.
Oh, the CEO was just indicted and all their contracts are being canceled. Okay.
Yeah.
I liked it at 80 before I knew all that. I hate it at 50 now because I'm not convinced it's going.
But but that's the thing is I think a lot of people in a bear market get cold feet. I'm one of those people. I'm guilty of that too. When there's a bear market, I get cold feet. I have to really force myself to buy something in a bear market.
Yeah,
because I just don't know where the momentum is, right? And it's tough to tell.
It is. It's just the thing is for me, when we start to talk about bubbles and we start to see corrections, to me the big thing is, okay, I know we're in a correction, and Warren Buffett actually says this best, which is essentially, if you're buying stock, don't think of it as just I'm buying shares. Think of it as I'm buying a company.
Yeah.
Because that's what you're doing. That's all shares are, is they're a company.
They're portions of a company, yeah.
So you're buying portions of a company. You look at this company and you say, do I expect this company to still be here and or do better over the next 5, 10, 15 years, whatever the time period is, and then stop and take a holistic view of the U.S. business, of businesses in the U.S., the whole business sector, the economy. And if you're sitting here going, nothing's changed, I still think the U.S. economy is strong and doing great. There's no reason for you not to buy into a bear market.
Yeah, but at the same time, you also you have to consider things like, okay, well, there's a military coup. This company does most of their they buy a lot of gold, right? So their profit margins are going to be slim because there's always revolving around gold.
There's always the unknown.
Yeah, exactly. But speaking of what is known is you can always...
Sorry, Aaron, I don't mean to burst your bubble. Do you want to... Sorry to burst your bubble about what is known and isn't known. What I know is that...
What is known? Tell me what is known.
If you go to drunkenomics.myspreadsshop.com...
That's exactly what it is. That's exactly what it is.
Then in there... you can find some of the finest merch.
Hoodies. I mean, we're talking hoodies and other hoodies.
Coffee mugs, stickers.
And other hoodies.
Posters.
And hoodies, bro.
And other hoodies.
To help
it. Yeah. And the great thing about a hoodie is you can put that hood up and you can try and keep your hair dry when the bubble bursts.
Exactly. Because we don't know when it's bursting ever. We don't know when we're going into correction. But what is correct is some nice Drunkenomics merch. And that's exactly where you can find it.
Absolutely.
Drunkenomics.myspreadsshop.com.
That being said, if you just want to help us If you just want to help us keep the lights on, the ice cubes frozen, and the liquor cabinet stocked, feel free to check us out at patreon.com/drunkenomics. And, feel free to support us there if that's something you feel like you want to do.
Yeah, if you have too many hoodies and everyone you know has too many hoodies, then go to patreon.com/drunkenomics. That's DRUNKENOMICS. And there,
no matter what happens this week, folks, no matter what happens this week, guys, when it comes to the Fed meeting, anything else, whether we enter correction territory, whether the bubble does finally burst, just remember
to always play chestnut checkers.
Yeah, be like Joe Burrow, play chestnut checkers.
Play chestnut checkers. To fill and kill, which I don't know if Joe Burrow does that, but I mean, I feel like that if he won the Super Bowl this year, he would absolutely.
I mean, he definitely had some Van Winkle.
He did. He had some Van Winkle. I mean, this dude is the classiest dude ever, man.
He's a classy broad.
I bet that if he won the Super Bowl, he would absolutely fill and kill that Van Winkle. I mean, he would absolutely do that.
Oh, he would fill and kill.
He'd cut and light some cigars. Yeah,
and
what a cool dude.
Yeah, he'd keep it as drunkenomical as he possibly can.
Yeah. Cheers, my friend.
Cheers.